Okay, sorry guys, can you hear me? Okay, I was just doing a bit of late trading, got myself caught in a position, but it's probably going to close it out in a second. Just short the Hang Seng seems to want to reverse something now, doesn't it? There we go, done. Okay, now can we hear me loud and clear? All coming through. G'day, Pete. Am I coming through okay? Just let me type that in. Ah, sorry. Thanks, Pete. All right, I'll just I was just playing around the Hang Seng. I don't like to do too much before I do a stream, but had a couple of longs. I've been all over the show, up and down and sideways on the Hang Seng this morning. So about break even for the day. It was kind of a really, it's sold off hard. I'm not sure if anyone watches the Hang Seng much, but yeah, got knocked about quite a bit. I was just reading the comments. 400 freestyle. How's it going? G'day, Mark, Nathan. Are we good guys? Um, just don't want to see that Hang Seng drop while I'm out now. Am I? Yes, the Hang Seng, I noticed that it actually traded down in support when the rest of the markets, like the Nikkei, was going up. This is in US session. Europe was up. US was up. The Nikkei actually went down when the US session was trading, sort of down to sideways. So it was under pressure, and then it's opened up this morning and got smashed through support, which is the Hang Seng does it a lot. You'll think it's going up and go down, and think it's going down and go up. It's kind of a not wouldn't say random. They do play around the index a lot, so you've got to sort of understand your levels. You've got to understand what's happening. Where would they flush? And if they do flush, if it like this morning, it actually comes straight down. It's actually bounced back a bit. I'm just wondering whether it's going to go back up into the close, but it's under pressure either way. So what I'm going to do is go through. I'll get that up now. Today, something different rather than just talk about the markets and shares. I'm going to talk about basically the way I'm trading the Hang Seng and some bits and pieces, just levels, and it applies. I mean, it's not just these are the setups or are common to the Hang Seng and nothing else. It's the same kind of price action that you're looking for. Some key things that if especially if you're trading intraday, even on the share market, we talk about this a bit. A lot of price action. If you're trading intraday, the markets can move in a particular way, and they tend to go from level to level. And the way I tackle my entries, some markets is a bit tougher. And like I know there's a few guys trading intraday on the shares, and they move. Sometimes if you're not on the right side, you can be getting it right, but it's hard to get it. Unless you're doing a load, really big position, it's hard to get on the right side and make worthwhile of it. So, but I still think the price action is the key thing. Understanding what's happening, understanding your key levels where you expect some action, and they can be so your key levels can be different from market to market. Like the shares might be slightly different. What sort of level you're looking at and why? Is the inside level that you've got to be concerned with, especially with index trading. If you're getting bullish and it's sort of popped up through a level, you might not realize it's a minor level and you're thinking it's going to go from one to another. You might think there's a key resistance that's going up there and you're up a few points and it drops like a stone because you haven't quite analyzed it properly of where there's some inside levels which they work off. So just understanding what the price action is telling you. So I'll have a bit of a chat about that, but go through the usual opening. Welcome. Within the live stream, what day is it today? The 26th. So we've got a couple more days in lockdown in Melbourne, a couple more days of teaching the kids, and then it's freedom. Freedom in a good sense. It gives me more time to do a few things. So, yeah, they're back to school on Wednesday. So it means that I have to get up a bit earlier to get my stuff done before I take them to school. But it also means that I don't get them coming in and out. I don't have to teach them. Not that it's been a lot of that today. It's been kind of a tough gig. Poor kids, not learning a hell of a lot, but yeah, it's the nature of the beast at the moment. Um, Anyone that's new, welcome. And just remember, you can join us at Twitter, the top left-hand corner. Follow us on Twitter. Top right, follow us at Facebook. At the bottom right-hand corner, subscribe to us at YouTube. So, like I said before, many times, if you put up, once I get into a stream, if you're uncertain whether there's one on or not, I generally put it up all the time, about an hour and a half, maybe 2 hours in advance of the stream. You'll see it on. If you're subscribed, you'll get an alert through not Twitter. What's it called? YouTube. There you go. I spat that out. You'll get that through YouTube, and you'll then you can just jump on at the time, so you'll know when it's actually something set up. Sorry, I'm just watching this action at the moment. All right, let's minimize that. We'll get into some key aspects for trading. Now, I'll get rid of that. So this is the open today. I mean, look at that open. It's gapped down. It's down 600 points at the moment. This is the underlying index. So that you get anyone that trades the physical opens at 11:30, and the futures or the CFD starts kicking off at 11:15. So 15 minutes prior on the Hang Seng to open. All markets, futures trader, index trader, all markets do that. Basically, they'll have a pre-open. In Europe, I think DAX is at what's the DAX at 4 o'clock, and then the index is at 5. So they've got an hour of argy-bargy beforehand, and you'll see the market will chop around. So that period's kind of harder to trade. You get a breakout to the downside, everything's perfect, you got lower highs, and then it turns around, whips around, and you just flush everyone out. So they do muck around with it. And if you're a believer in, pure price action, you've got to realize that markets get played every single day of the week. Algos rip into them on thin volume. There's algos tripping longs, tripping shorts, everything. They know levels, they'll charge into a level, and you'll see it every day. So you just got to be wary. So it's kind of like and with the Hang Seng, it's that 15 minutes where the market will muck around. It looks like a big sell-off, and then it could whip around on you as soon as 11:30 kicks off and just charge straight back up again. So you've got to be careful. They tend to flush levels, flush support, flush resistance, flush all sorts of levels when they're just about to open, catch people on the wrong side, trap them, and then squeeze them back out in the opposite way. So we saw, actually, this is the futures. There was a market there that on a 1 minute chart. I'll actually flick over to it. This was the open. It gapped down on the open. I expected it to bounce back because I've got it not on the trading view, but I've got I mark up all my stuff on Trade Direct on the charts on Trade Direct, the levels. But I've just got this as a clean chart because I want to go through and work through with you where how to go about searching for key levels that you would expect some action. We expect an action or a reaction into the market. We'll go into those. So I've got this level clean. I've got on Trade Direct, the charts, I just have them recurring on the demo version. We just keep flicking up. So I'll just save that, and it's just it's on there permanently. So I can just open it up, see if I've got to adjust anything, and then readjust different levels each morning. But we'll walk through with it now on the Hang Seng. And like I said, this applies to a lot of on the index markets. If you're trading indices intraday, it's really good. Indices can be very powerful tool to get some gains, and it's kind of limited risk, but you've got to be willing not to when you're trading indexes. And the same with FX, your currencies, and probably your Bitcoin. Bitcoin absolutely ramped up this morning. I have no idea why. It was out of the blue for me. I expected it to pop up through a level, but it didn't just flush it. It just completely blew it away. So everyone was biased one way this morning, just straight up. And the same on Ethereum and I guess across the board. So there's a couple that would lead everything else. So you got to understand that too. What markets are leading what? So it's important to know which levels you want to trade from. All right. So this morning, let's just go. This morning you had some levels in here. Have I just drawn another line? No, that was kind of a level in there. And you had some inside levels as well. Get my mouse back, it's disappeared. Can everyone see that okay? And we've got, I want to see the right hand side. Yep, all good. It's just the top of the chart, that's fine. And you had, this is the 30-minute chart. So that was the action on, was it 21st? It was Wednesday? You know, it's Thursday and then Friday, and this is today, Monday. Yep. So that was a low prep put in. The market ramped up. So what it did, it took out some lower highs. The market was up, and then around this last session, it sort of did nothing. Pushed up through some lower highs, and then went sideways. And then the next day on Friday, just went bang straight down. So it's kind of, you're looking at that as a key lower high on the bigger time frame, where it's a daily, hourly, or 4 hourly charts, whatever it is. But you're looking at it as a lower high, and the market's come powering down. And this is what I was saying. The market actually from that was 10:30. So that was the open. Basically, US opens 11:30. So just before the open, we had a big sell-off, and the US went up. So it's kind of like, well, what's going on there? So I was a bit cautious this morning that we could just flush the support and pop back up. But instead, we didn't just flush it. We pushed straight below it. So that kind of a move when you power down, and this was 11:30. So that was the open. So I was mucking around here on the 1 minute time frame with a couple of longs, and then got on the short side and made it back once I figured that out. But that couple of candles there, red candle and then the inside candle, and then we started to expand to the downside. You kind of think that if it's going to bounce back that level there, markets, if they want to bounce back, they tend to bounce back hard and fast. Okay, so if you're watching that kind of thing, say we've got, this is our support zone, what we should have seen is potentially that open and then gap straight back up the next candle, and then potentially just chop around here as we want to base and build a higher low to ramp back up again. So that's kind of what you're expecting if the market is just flushing a level. Now, the fact that we've sort of got the inside candle and it was hovering down near those lows of that first 5 minute candle, and expanded down, you kind of think this lower high is going to lead to, we're going to probably, and that's why I went short just before, we're going to at least tack on those lows. And that's a lower high, and we're going to drift down. We've got another hour and 15 minutes of this session, and we just keep drifting down. Now, the market's down about 600 to 700 points at the moment on the index, which is, let's just see, 655 points down. So that's kind of, you could be looking at that and fooled in believing, okay, it's a tough gig for that just to keep drifting lower, because we're already down nearly 2%, around 2%. And I'll be looking for longs, but you've got to really take into account price action. Price action, first and foremost, is ahead of anything. But you've got to be, obviously, manage your risk when you're trading. But what am I trying to say? Yeah, you've got to manage your risk. So if you're trading, I tend to look at my levels. So what we'll do is we'll clean, I don't want to clean that up exactly, but I want to go through and walk through a couple of sessions before I get involved and get off the topic too much. That's the MA, so I can't delete that. All right, so we'll get to, this is how I basically would set up a normal day of trading. I would get into, say if we're, I just want to go back to here. So that's a session, all right? So that's coming into the session, I don't know, what was it, the 21st? And this is what we're presented with. So we're presented with a market that's, it's heading south. And at the moment, there's lower highs coming into play. You've got a lower high in here, market pressure down. It didn't get through those lows, by much, and it sort of bounced back up again. So you could say we're in a move down, but it's lacking a bit of emphasis as we come into the previous low. So all I'm really doing is going, well, I'm not going to guess which way it's going. And I think I was talking about that last time. I used to put up a note, I still do sometimes, especially if I've had a bad day. So off the back of a bad day, I'll tend to put a note up, trade what you see, not what you think. And I think that's a key sort of mantra that you've got to go by. I mean, like example, I went short before. I'd already been long and short, and I was long on the bounce, and I went short. You sort of don't sit there thinking, okay, it's over, it's gone too far, I'll just try and pick a bottom, because picking a bottom, I know for me, it gets me in trouble more often than not. And that's what got me in trouble just on the open this morning, a couple of losses, because I was just trying to pick a bottom and I wasn't really concentrating. I was just going, oh, this is going to bounce. We're down quite a lot. The US was up. You can't look at the US as an indicator. Yeah, there's markets that will follow the US, but I don't think we're following the US at all. The Hang Seng's not following the US during the day at the moment. It will if there's a big sell-off, because we're all racing to the bottom. So if the Dow starts selling off during the day, the Hang Seng will probably go with it, and other markets will. But at this moment in time, at the moment, we're not following the US. So if the US is more following the Hang Seng or the Nikkei, the Nikkei is not following the Hang Seng in particular. Every market's got sort of their own intricacies during the day. It's more of about chop. you can't buy the SPY because the Nikkei and the Hang Seng are going up. It could get sold off easily enough, and it could just do the reverse of what you think. So that's where it comes down to trading what you see and not what you think. So coming to this day, what I would particularly do is just go, well, I know that's a level. Okay, we've got some buys in there. The market pressed down. It's popped up. So this was the open, 11 o'clock. Market powered through, flushed it, and then reversed off that level. Then you've got a high, low in play here, and the market's just pressured up. Then what you've done is on the reverse side is you've got the market popped up, sold off, and I think this was on the open the next session. No, it wasn't. It was at 3 o'clock. Retested that, and we started to fail since. So as soon as you get through, your anchors to the upside, and by anchors I mean, you should know by now if you've been listening to me rant on for a while, anchors is holding the trend up. So it's your high low on an uptrend, your lower high on the downtrend. So as soon as you break that anchor, which is just in here, you break that, you're basically breaking that trend up. Now, from there on, you got to guess whether, or you got to analyze the market to see what the action's saying to you, whether it's going to go up or down. Sorry, not up. I'm just looking at that Hang Seng sell-off, so it's a bit of a shame. You've got to analyze whether this market is going to go contract sideways after the uptrend, or it's going to actually head off and sell off, head lower and sell off. So you've got the market from here is started to hold lower highs. So I'm really looking at that going, well, I've got another level in here. Okay, so these, as you get close to the price action, they're sort of the levels. I mean, these outlier levels, I wouldn't expect that, but if the market's going to get into a good, solid uptrend for the day, I want to know where it could be heading, because I'm always looking to go from a bid zone to an offer zone, or a level to level, you know what I mean? And on the downside, from an offer zone to a bid zone. If it's come off, this offer zone, for example, and the market's sort of pressured up and it's just come off that level, and I've got a short on here, I've got a short on off the shoulder after we got that flush and we're showing some weakness, I want to know where it's going to. I'm following the market down and I'm adjusting my risk, but it doesn't mean just because I've got a level marked in there below that it's going there. It could fall short, anything. So there's two things. I want to know, is it worth opening up the trade to try to hold it for the move down into a support zone, or is it worth really tightening that risk because it's sort of going nowhere? Or is there a level that, like this, for instance, I could be coming into that zone there. I've got my short on. I go, oh, that's not, it could just power into there. If it gets there, what do I want to do? Do I want to tighten up the risk if it gets there and starts reacting up and off? Or does it trade through it? And I'll go, okay, if it trades through, maybe I'm just waiting to see what it retests and goes lower. Okay, so you've got to mark up your levels to see, to get an understanding of where you should be managing your risk from. Like I said before, if there's no level in between this, say for example, there's no level here on the downside, the next one's right down, I could afford to have looser risk and just let it, if it's going to move down like that, I could have a lot looser risk. Okay, manage my risk, move my stop down. I tend to use a stop. I will trail it manually and just drop it when I can. If there's no level that you're coming into, you know that it's kind of a long way off and there's no clear reason why you should be getting out. I could manage my risk because it could be a trend day. I don't want to get on the right side of a trend day. I've done the hard work to get on the sell side, and I want to take advantage of that. I mean, in saying all that, it's not as easy as that, but that's the theory behind it. So obviously we're trying to manage that now. Like I said, if there's that risk, if that level is coming into play and you're kind of close, and you might be up 20, so the Hang Seng, I use a 40-point stop, you might be up 20 or 30 or 40. At that stage, you might be half or 1-to-1 or anything, but you're sort of looking at it, go, well, that's the first level where the shorts could get caught out and the longs start to come in and soak it up. Okay, so how am I going to manage my risk? You've got to know in advance how you manage your risk. Now that's different for every single person. Okay, I manage it might be different to someone else. Someone else might have a short on here, stops up there, they've got in here, and they're just going to leave their stop up there and not even trail it. Okay, so it's up to everyone to manage, to understand how you manage your risk coming into that trade. Okay, I tend to trail it. I might look at it. I'm looking at a 5 or 1 minute chart. I tend to look at the 5-minute action if it reacts up hard and it's showing some strength on the one, as in the MACD or the momentum starting to shift on the 1 minute chart to the upside from a downtrend, and the 5 minutes start to show some strength as well, then I might just close it or take some off or tighten my risk right up. So if I get stopped out, I've got a profitable trade. I'm not losing too much, but I've given it a slight chance to continue on if I'm wrong. And I don't really want to close it out at a level um, ideally want to let it trade and see how it's going to react at that zone. Okay, so that's just on a management basis. So this is how I would be going into that market. Basically, you've got your levels mixed set up. Let me just get rid of all that. Is that clear on the screen, guys? Is it making sense? I'm trying to make sure it's a bit clearer. I've got that there. There you go. We've got the Hang Seng has just gone to target, which is the session lows. It's just gone through now, so that's a bit of a bummer. It's on the right side, but I think I made 50 on the trade, which look, it's good, but I think it's up another 60 or 70 points from my exit. So bummer. Anyway, at least it's a break-even session. It's another kick in the pants. All right, so we've got that's what we're faced with. So I'll just start in there. I can look at that and say, well, I've got some key levels. Potentially there's a little. I don't really see that as a key level because what I'm looking for, this is a leg down. So we're on a 30-minute chart. You've got little minor lower highs. You can see a green candle, then it goes down. You've got a little pop up, couple of green candles, and it goes down. Green candle goes down. Here is important because what we're seeing is just into the close before this is the close of the night session. Yep, 4:30, and then it opens the next day. We've got a minor double bottom, and then it opens up and goes through the lower high. So this leg down is just broken. Okay, then we have a little pop up. We'll retest this anchor to that downtrend, and then we resume our trend down. So to me, that's more of that's a key level as opposed to just this minor level in here. Okay, so I would mark it up, but I don't take a lot of notice in it. So it's got to do with, if we can draw this is the leg down in my opinion. That's just the most recent action down. I mean, it's only a lot of time frame, but you do know that it means, and that's the first break up. So that leg down is out. This leg down has reversed, and it's reversed off that key level. So we know that's a key anchor to this overall leg down that we're looking at. Okay. So and then we've got, again, the market has bounced off this zone in here, and we're starting to head higher. So all we're trying to do from there is assess the action. So we've got the opening market, it pressures higher. So we go, okay, well, potentially there's a trade if we flush up to this level, and I'm only ever trying to trade really off levels. I don't want to trade in the middle of nowhere, because in the middle of nowhere you could get caught. So if you've got a market, just say that's a level there, that's a level there. Okay, so you've got a market that's pushed up and it's gone down. You're sort of here. Now you don't know. You don't just trade short off that level. You don't just trade long. I would rather trade off a key level, because you don't know if that's going to start to go back up or it's just going to head down. You don't know, but you do know that there's probably going to be some action at a level, because either people are trying to defend it or people are trying to get short. They're waiting for the break of that level. They're waiting for it to bounce off that level, but they know that there's going to be some liquidity around those zones. Okay, so there's liquidity around here. There's not much in between. It's kind of like, well, if you didn't get short here, you're waiting to see what happens at this level. That's how I would expect a lot of pro traders, or the algos, will be pushing from level to level. Okay, they're not looking around these levels. They're chopping up and going down and going up and going down. They're trying to trade from level to level. Okay, so in this respect, we've got the market has pressured through that level. On the upside, we marked up. It's only a minor level, and then it's flushed down. Oh, where's my little mouse? Oh, here we go. And we see it's just got smacked down. All right, and you can see how we've come into that zone there. So what we've done is flushed it on that, and then straight back up again. The next 30-minute candle. I actually want to go down to, sorry, I forgot that, the 5-minute. Okay, so this is where we are at the moment. So what we're seeing is the market it's reacted. It's gone through that level. I remember on the 30-minute chart, and then it started to bounce. So we're getting an action. So buyers are defending that zone. We know that buyers are defending because it's reacted straight up. Okay. It doesn't particularly mean that we come into that zone, and this is why I would never. So if I was going to buy into that zone, if you're going to buy at a level, you can't buy into a zone, if that makes sense. So I have zones where I expect the action. I don't know roughly where, but I know where, it's in, say, a 20-point zone or a 10 or 15-point zone where I expect something to happen. I expect the buyers to lift their game and pressure price higher, try to squeeze the shorts out, or I expect no buyers and sellers to go plow through it and realize that there is no support there, so we'll probably build a lower high and keep going lower. Okay, but I do expect something to happen there. That's why I would never buy it, because if that's a 10 or 15-point zone and it just pops through it and bounce straight back up, you could easily get in and out. And where do you enter it? Do you enter it right in the middle of that zone? Do you enter it just into that zone or just below that zone? I mean, it's very when the market's heading down like that, you don't know where to buy it. Okay, um, there is no there is no how am I to say, there's no indication of whether that market's going to pull up. Like we said, it can just go, um, let's just say that's our level there, but we're here. You don't know if it's just going to go straight through and do this action, or it's going to go through and bounce. Okay, so they're the two sort of scenarios you're looking at. You want to see it plow through. What happens on the retrace? On the retrace, it gets selling pressure. Okay, we can go short from there, because we know that anyone that's buying into that zone, and we know that people do it, they buy into the zone time and time and time again. And when it starts to turn around and hit a lower high, they all have to get it back out again. They have to cut out. And this is not just retail. This is your bigger punters, bigger size. So there's going to be some volume coming in. Okay, but we do know that if they get on the wrong side of the market, they're going to have to sell to get back out again. So you would never, especially in indices, you would just never put on your bid into that level. I'm always looking for, if I'm trading from the 5-minute, like here, I'm always looking for a 1-minute setup. I want to see what's happening, because this action, it could be straight up on the 5, but on the 1, it might be a higher low. And I might see this and I go, okay, I've seen that. I'm buying the rise in the 1, the 5 minutes bouncing, and I want to get in and just manage my risk as I go. Okay, so that's why I would never buy at a zone. I try to emphasize that. And I feel that's the same if you're trading intraday shares, if you're trading indices, if you're trading FX. You can always drop at a time frame to get some finer detail, and then you know where to manage your risk. So if this is on a 1-minute chart, there's a possibility that on the 5-minute it does this, and on the 1-minute I get in long there, but I know where my risk is going to be. Then I'm not risking a hell of a lot, and I could trade long off that and be wrong, but not manage a lot. Sorry, not risk a lot, and then turn around and get short. I mean, I do that every single day on the Hang Seng. There'll be times when I think the other day, a couple of days ago, I was long. I realized I was on the wrong side. I got in, basically 2 points above where I got in, or 5 points above it went, and then turned around and head south. I was thinking of two things. It's either going to go up or down. Simple as that. Breaks up. I want to get long. It broke up. I got long. Realized I was on the wrong side because it come flushing straight back down, and I realized it was a washout. So what do? Flip and go short. I think it was a 25-point stop. And I didn't wait to hit 40, and then basically went and got short and got out for about 60. So you can be wrong and still be right, if that makes sense, just by managing the way you enter properly. So we've got this market is powering higher. So I was going to do a few examples, but it looks like we'll probably get through one. So the market is heading higher, and then you've got the price action is grinding back down again. And what you can see, we started to play this out in the 5. Okay, so what I'll be looking at here is this as a higher low. Okay, so you've got your key level. The market's played into a key level. It's reacted up, and I think it's key to notice the reaction up. It didn't just go through it by a few points and bounce by a few points, because there's no reason why if it just bounces up slightly, it could just keep going down, and you could get this earlier scenario, the first scenario. You want to see it sort of bounce quite a bit. So what it's doing is putting pressure on all these shorts. Anyone that's shorted in here into that zone, it's bounced enough to really put some pressure on them and get them thinking that, well, look, I could be on the wrong side of the action. Okay, and then the difference between this move down as opposed to this move down, you could see that there was a lot less resistance from sellers. Okay, next to no resistance from buyers in here. Okay, and sellers were piling in. Big bounce, and buyers started to step in a bit better, averaging down, however you want to do it. Algo's sort of chopping the way in and out, all the way down, and then looking to average, have a net long position, net long exposure to a potential rally. But you can see that buyers were stepping in more, or there's not as much pressure from the sellers, okay? And it's getting soaked up. So you've got to you've got to take that into account, sort of the gradient of the move down. And then, of course, we've got our really nice higher low in here, and the market started to rally. And you can see, I think, yeah, it continued to chop its way higher. So after that, the next, I'll just see if I can get this one. So this was the next day, the next morning, the next open. Okay, so I just want to see the way I attacked this one. Okay, so what I was looking for, you can see that the market had powered up into the close. Close about 5 a.m. So the close was somewhere around here on the Hang Seng. The market's popped up. It's basically gone sideways into these highs. So I've marked that high up. I think it was at 5. Yep. So if you can see, and we've still got this level marked in from the previous session, because we know that nothing's changed there. We know that there's sellers pressured down, there's sellers in there. There's potentially, if we get back up there, there could be some more selling, or those sellers might be squeezed out of the action. We don't know. Okay, but we do know that there was a level of, it's quite clear that that's a level where there was an action prior, and we're expecting to see either a reaction back down off that level or some bias to pump it straight up and through. All right, so we've got the market has just popped through this high in the close, and then we've got the first few minutes were up, not convincing. So there is a bit of selling pressure coming in here, and then this candle was 11.25. So right at 11th, just before the market index open, the underlying index, we've got a bit of a red candle just to potentially flush out some longs. What I'm looking at and the way I traded this, I think I did jam in long somewhere in here. I don't think I got all this move, but I've got some of it, which is pretty good. I think this was a day where it was a one trader. I think it was 80, 90 points. So it might have been a really good 478. Yeah, I might have got this extension up and then took it off. So what I'm looking at, if you can just look at just that one candle. So we know that candle's coming down on the 5 minute. So we've got this up at the 5, and I figure, look, the market's going up. The next level we're heading to is higher. We've just popped through this zone here. So I'm expecting that market to extend, okay, into the next zone. And I'm just trying to trade, basically from this bid zone to an offer zone. Okay, and I figure that if the market goes through that level, I could, on a 5 minute chart, and doesn't take out the 5 minute low. So we know from here we've just boxed up. Actually, I'll just box that up by doing that. We boxed up our risk and our entry, and I'm looking for that market to expand. I mean, it's easy to say that because we've got a green candle there, we know what's going to happen. But prior to this candle forming, I'm looking at 1, 2 green candles, a red candle, but it was an inside candle, okay? So we've got uncertainty from both bulls and bears. It might be a bit of a pause from bulls, because if you're going to buy, late into this trend, where is our risk? Our risk is way down here. And if we try to measure that, way down here, you've got a 74-point risk. Okay, I'm not willing to take that, but as soon as you got this inside zone, we break the top side, our risk is 37 points. So it's within my 40-point range that I want to trade with a stop. Okay, so if we go down to the 1 minute chart, and I'll try to find it. All right, come back here. That is right on the open, and that's my setup. But what you can see, if anyone doesn't know, we talked about the W pattern, the M pattern. This is sort of all those 5 minute candles. That was your 5 minute red candle. And as soon as it finished, we boxed it up. We figure it breaks out to the top side. We want to be in 11:30. And this was that candle there. So up until there, we've got this red candle, green candle. So we know that there's a bit of support coming in there. I sort of look at it and think, well, look, if it breaks to the top side of that bar, I want to get in because I'm going to look for some more expansion to the upside. And it did that. And then we had another entry here. Okay, actually this might have been, no, it wasn't. Anyway, so you've got, I can't remember where I traded that. I'll have to find it out later. So what you've got there, you've got a good little pullback in the one. We've boxed up our risk. We know where we want to enter. We know where we want to exit because of what the 5 minutes tells us and because of the fact that we're expecting to go from a bid zone to an offer zone. It plows into that offer zone and reacts straight down and off. So you might have taken some off there. You might have closed it. into that. I wouldn't, like I said, I wouldn't particularly want to close into that level. So at this stage, we might have our entry about here, and our risk is there. Okay, we come back down and test that breakout level, and then we rally again. So you can raise your risk roughly about break even if you're just trading off your high lows. Okay, and then we plow up and through. Okay, so the fact that we've gone straight up and through that level, what are the two things? You got to remember the two things we're going to be thinking of. We're thinking the market's going to go up, retest, and if it holds, it's going higher. Okay, so if it holds that zone, we're going to go bid to offer again. Okay, and then we've got our levels marked up where it could go to. Okay, and we're just trying to manage our risk up into potentially that zone. I think it fell short of a zone, but either way, that's what we'd be looking for. Or the other scenario was, a bit of a spike through and then straight back down below, and then we were looking for that lower high. So if we get something like that, where it goes through, and I'm always trying to judge, I want to see a bigger move through, not just a few points above, but say 10, 20, 30 points above, and then that pullback, start to grind in, and you can see that it did grind into that zone. Okay, so we've got a couple of red candles, a green candle rejection off there. So it's the first hint that, okay, we could be holding it. The next candle comes straight back down to that, and then we reacted straight back up. So this was actually a good little entry. Okay, you could have entered just on there. And I'm trying to enter off, off levels where I would expect, and I'm looking at these two scenarios, I want to see either flush through, take the stops, and as soon as it comes back down below that level, you know that the stops are going to be in trouble. Okay, anyone on the board on stop on the breakout of that level and is not trading particularly the price action, but might be trading on a bigger time frame, we get this scenario, we know there's going to be a squeeze on. If we get it going through harder, it just means that, and it goes through a bit higher, we know that there's probably no sellers in the way. Okay, and there's a bit of a back and fill into that zone, and then we're looking for it to start to hold right at that zone and lift again. And as soon as we start to lift, we get any indication it's starting to lift on the 1 minute, we're trading for that 5 minute continuation. Okay, so I'm watching that 5 minute chart continue higher. And we've got another little entry here. Again, our entry is just above. And if you can see what I'm saying, we've got this down, pop up, and we've got a low. Okay, then we start to pop up here. Probably it's more of this you can't really see it, but then we've come back down and we've gone again. So all within that candle structure, and it's a couple of red candles, and we've got a green sort of finishing up. So that's sort of the first pop. Then we go down, up, and we go down, back in that candle, and we're straight back up again. Hopefully that's making sense because it's really hard to see, but I know basically know what I'm looking for. So what we've got is that price action you've got is down, and then we've got this kind of thing. Okay, and we're just trying to take the break, and we've taken the break to the upside here with our risk just below, and figure that we've got two legs down, it's back into the level. If it starts to break to the upside, I'm expecting this scenario, high probability setup. I'm looking to go long with my stop below and just see what happens. Okay, and as it played out, momentum is still up in the 5 minute chart, is up nice and strong. Momentum is up on the 1 minute chart, so we've got confluence of the two charts going in our favor, and we're just riding it up, and then potentially around somewhere around here, you could take it off when it starts to fail, and you got that M pattern. By M pattern, I mean we've gone up, back, up, and down. So we start to see that M pattern as opposed to the W pattern. The W pattern's more here for the entry. The M pattern form, it could be a bit of weakness coming in and a bit of pressure to the downside. Okay, so you can see how, just going back to the 5 minute chart, I might have to clean it up. You can see how this little pullback, it didn't last very long, and we've got that expansion on that candle there from 1140. As soon as it started to lift, we jumped in long because we're expecting the scenario of a retest and continued rally, and we look at taking advantage of that in the lower time frame charts. And I use the 1 minute to refine my entries. It's not purely just off the 1 minute chart. Okay, you got to understand that I'm looking for levels on the 30 because they give me some good strong levels to work from. I'm looking for the price action mainly on the 5. If I've got a nice uptrend like this, and I define that the MACD, MACD you can see is on the rise here. It's above the zero line. That to me is momentum up, and it's quite strong. I've got my 10 above the 20, which is above the 50 EMAs. That's a strong uptrend, and I'm looking to trade continuation patterns off the MAs. And I'm looking to manage my risk, and it helps if you get the 1 minute on your side as well, which it was. And then 1 minute was an uptrend. Now, there's going to be times when the 5 is saying up, the 1's saying down, and you're getting confused because you've got contraction on the 1. And that's just a harder, choppier market. You just have to take that into account. Okay, so does that make sense? there, guys. And it's worth just looking at this entry to the downside. So we've got, if we're coming into this session here, you can see the market sort of, it's grinding down from the previous session. We took advantage of that rally up. I'll just clean that up. I'll get rid of that. I'll draw that up quickly. So we know there's a clear zone up here. Probably mark that as a bit of a level 2. That's an inside level. And the reason I picked that level there, you can see it's popped down, it's reacted off there. So when you check along, and it's reacted again and again and again and again. So, and it's actually gone through it eventually. It's come back down. It's sort of just hovering sideways into the close, just above that level. So I can take that as a minor level, but not anything too serious. So what we're looking at is coming into that session is this zone up here. Is that going to provide more selling pressure? Is it going to provide more selling pressure up here? If anyone who's watching the hang thing, it's actually still cruising down. So just, yeah, it's frustrating. It's frustrating, but anyway. So you've got a sell zone up there, so you want to see what happens on the open. Do we spike into that level? Do we continue on? And again, we're looking to our 2 patterns. We're looking for a break through it, a retest, and a continuation up from this level and taking the expansion up, or are we going to flush through, take some stops out, and come straight back down below to get a selling opportunity off a lower high? I'm on the 5 minutes, so you may not see it, but you can see that. So the market's opened up. So if we go into the 1, because I want to show you more on the 1, you can see the market's opened up and it's reacted straight down and off. So it didn't really flush through, didn't take out any stops, but it's opened up at that level, straight down. So you know that, okay, it's coming to the key level. There's a reaction down. Where could we be going to? Is this just going to bounce off the MAs? So if you're looking at this chart on the 5-minute chart, so when we got that green candle, you could potentially box that up. I think I traded short in here and got down to, I didn't get all that move, but got something on the short side. Okay, and what I was looking at, saying, well, okay, if that one green candle, we start to get failure to bounce off that MAs on the 5-minute, where would we be going to? Okay, so if we mark that up at 656, the next level down is only a minor level, is 610. That might give you, 40 points, and I could have a 1-to-1 trade. Okay, that's okay. It's worth having a bit of a crack at. If it goes through that zone, 568, say 570, it's close to 100 points. It's about an 80-point move. Okay, that's a good move. Okay, I'd be happy for that. And I'm knowing that these 2 levels are minor levels for me. That, okay, this level is minor. So there's a chance that if we go down and start really putting pressure on the longs, because we know it faded the previous day, it's bounced up, it's squeezed out some sellers, and the pressure's back on. Essentially, that's a double top, and we're looking for a shoulder off that double top, which you've got on that 5-minute chart. So if we go and look at the action on the 1, we box that up. Remember, we box it up. So we're talking about that green candle. Oh, here we go. There we go. So what you've got on the 1-minute chart, I think it finished, was it here? 11:29. So we've got a bit of a zone here. It's bounced back down. So you can see it's touched on the bottom a couple of times. It's found sort of a little minor. Remember, this is a minor double bottom, and we've come up and got a minor double top. So we've just drawn that up. It's got a green 5-minute candle. So we figure, look, if it starts to head south and breaks down through the bottom end, it could be a good short in play. Okay, and you've got other opportunities to hedge short as well. We've got this opportunity. I actually know, I take all that back. I traded short here. I didn't take the breakout, but you've got the breakout there on the short side. We've got a pop up, and now we're starting to follow on the 1-minute chart. The MAs are down. We know that there's potentially going to be some expansion. I traded short into that, sat through this, and took it off right here. So that was actually one of my better trades, to be honest. I think we had, was that 82 down to 5? I think that ended up being about a 80 to 90 point trade. I took it somewhere just when this red candle was expanding lower. Okay, so I was preempting the fact that we're coming off the 1-minute, the MAs are down, momentum's down on the 1-minute chart. We know that we've got a lower high on the 5-minute, and we know that we've got a 5-minute double top as well, don't forget. And we're just trying to follow that down, and we're just trying to see, where's that going to expand to? Okay, and it's taken out the support, it's taken out this low, and obviously I think it's started keep drifting down, but by then I'm done and dusted. I'm happy with that. So does that make any sense, guys? Is that the key takeaway, I guess, what you're looking for, you're not trying to trade, just put in an offer. Okay, you're not trying to sell as the market's approaching a resistance zone, what you think is a resistance zone, because yeah, you could be good on your resistance, but you're not going to be good on whether the market's going to flush or not. Okay, and you're not going to be. I think more often than not, I think it's a 50-50 game. Okay, whether or not, yeah, look, you could have your stats. You might have 50-50. I'm right or wrong. I'll sell that all the time. If I get stopped out, um, yeah, look, I could get back in. That one might not be that might be wrong again. That might be a second trade wrong, two in a row. I don't think it's a winning strategy to trade. Just put a resting offer and wait till the market comes to you. You've got it below a resistance zone, and then you've got your stop above. Because I think more often than not, if it's a key level and the market wants to head south, it will go down. Say it wants to go down, if you don't know that just yet. I think more often than not, it's going to flush the level and put you back on the sidelines. Okay, flushing through, getting you in, stopping you straight back out, and coming back down again. And then you have to chase it if you want to get short, or you have to try again. Does that make sense? So I think it's key to mark up your key levels of where you want to take, you want to take some action into the market where you want to see you're either proven right or wrong. Okay, sometimes you get in the market, especially in the Hang Seng, can just come straight out of the gates and rally, and it's really hard to get a good setup. And it has been a bit like that lately. Well, previously anyway. Lately, starting to get a bit better setups, but it can really kick on, and you could be left on the sidelines doing nothing. Okay, so the key takeaway is really you're looking at the 5-minute chart. You want to see, okay, on the 5, we're looking at this level. That's our key level we marked up. It's not loading. Just see something first. I'm still kicking on. Yep. Okay, so that's our key level. We've reacted down and up off that level, so we figure, well, look, what happens? Anyone that's been buying into the close, any longs that are built up, and that's not a bad pattern to go long, longer term, I guess. If any longs are built up, what are they going to be forced into doing? They're going to be forced into selling. And when are they going to be forced into selling? Probably the first lower high that comes into play off that level. If that starts to fail and we don't react straight up back into that level straight away, they're going to be thinking twice. And we got that. We've got the 5-minute candle was a green candle. And if you were looking at that going, okay, look, we're going back up. And the very next candle started to head south again, which is at 11:30. Excuse me, and we started going down. That's a good entry short, because you know that there's going to be some longs that are on the wrong side. They've been trapped, especially on the open. They've been trapped into going long. They're on the wrong side. They have to sell to go back into the market, and there's a good chance that there's going to be a good setup. Other shorts that are more patient are working off a lower high on the lower time frame, on your 1, for instance. Then they're going to jump in. They know where their risk is. They know exactly where their risk is. Trading short here, your risk is above. Even like I said, trading short later on when you've got the momentum in your, it's a lot clearer at that stage going short off that lower high on the 1 minute, bouncing off the MAs, and you sort of know once it starts to get people on the wrong side of the market, it can really extend. Okay. Yep, I'll get into that. No problem at all. I'll go a bit longer today because I've probably banged on a bit too much what I thought I would. Yeah, so it's key. Know what you're trading. Know what your key levels are working from. Intraday, I work off of 30-minute key levels mainly, 5-minute as well. I'm looking at the 5-minute action to react up and off levels, and then I'm trading off my 1. Okay, and I'm waiting for flushes. I'm not going to jump in first. I want to trade off shoulders, and I even trade off. If you can see this, try to find a good one. I call it probably in here. You can see that not so much in there. Actually, there's a better one here. That's the high. I'm looking 2 candles back. If it breaks that 2 candle back, I'm going short, especially with trend. Does it make sense? So I call that a low LL2. Whoops, LL2, lower low 2. So I'm trying to take the break. Whoops, get rid of that. That's an LL2 entry, and that just means that I've got a couple of candles, green candles. I take the high, and if it starts to retrace, it takes out the first candle low and then the second candle low. I want to go short with my risk above. Okay, that's another way to enter. It's a bit more aggressive, lower probability, but it leads to a lot bigger payout. So when you're right pretty quickly. And if you just go back, if you get in short there and you retest the low and bounce, you're going to be up a certain amount of points anyway. So you can have a profitable trade and it doesn't continue on. Okay, so I use a lot of those, a lot of breakout entries as well. break the high, break the lower high, all that sort of stuff. But you've got to know those before you get into it. Let's get rid of that, and let's get into our markets. WBT. I got that. Let me just get up something to draw with. So any questions on what we're discussing? I know that probably a lot of you you're not too interested because you don't trading intraday stuff, but the setups are there and it's worth, and I'm going to look at this for myself. Entries, for example, you got this big expansion higher, bounce off the MAs. I'm looking for a HH2, a higher high too, for the candle setups, and try to get in and just see if it's refining, if it's worthwhile trading like that to refine my entries, especially with the trend. Like this just in here could have been perfect. Thinking, okay, this in here, trade the long in through here because you know that the sellers have tried to give it a go. It's bounced off the MAs, and we're probably going to, more than likely, we're going to head through those highs, which we did, but we failed. I mean, it just depends on how you manage your risk. You might manage your risk below. You're still holding in. You've got this run up here, or do you just go look, break at the high, like this kind of entry? You've got a minor double bottom, break at that $2 level, which is this green candle, breaks there, risk is below, and you're front running the break through that high. Okay, so I like to take those entries there, which I see as a high probability setup, off the MAs because I'm trusting my judgment of the price action. I'm putting faith in that, all this experience, where if I'm taking that, I'm not going to take the break out of that high because I know that my risk is going to be much larger. I think there's a lot better signs you'll see, like this, for instance, this little double bottom in here, minor double bottom. You know that it's on the MAs, and you know that the MACD's come back to the zero line. So if all starts to head high again, you get a bit of volume, you get that green expansion candle there. Yep, I probably want to be long that because my risk is below. And it's the first time that we've sort of shown some sort of strength in this pullback. And if we show strength and it happens to be right on the MAs and it happens to be right when the MACD is starting to rise, then why wouldn't you want to get long? Or the MACD is actually starting to turn over. It's worthwhile because you're throwing a small amount of risk, and you know that if you do come to any one of these two levels, you're actually ahead. And if it goes straight through, then it's a perfect trade. It's a really good trade. Okay, so where we're at the moment, the MAC, okay, so the weekly, the way I'm viewing this, Weebit, there's a couple of things. You've got through that zone through there, okay, which is a good thing. You've got push up, reaction down, slow reaction, form the base. Probably want to make that a bit thinner. And then we've headed higher. Why didn't that work? Okay, then we oh, doesn't like me today. What's going on here? That's a bit weird. And then we ramped up from there. God, I think there's a problem there. It doesn't like me at all. See how it's just going thick from there? There we go. I was happy that time. Okay, so we ramped up from there. What we've done is come straight back down to the MAs. Okay, we've got, I don't mind seeing these two moves. If anyone can see that, you've got move down, bounce off that $2 level, pop up, lower high. The lower high led to a move down. So if we go back down to the 1 minute chart, and we'll just go over that same price action. Make sure I'm low. There we go. That's your weekly first leg down, a pop up, second leg down. We got through those lows. We got through only by a bit before we bounced. Then we got through this low by a bit before we bounced. So to me, that was kind of, it's not bad action. And you know that in this zone here, we're starting to bounce off the weekly. Is that a key level? Yes and no. It's kind of respected that zone in there. If we just draw that up a bit clearer, it's kind of respected that zone through there, 170 or so. It hasn't quite got to that level there. So it's really, to me, that's a bit of a flush. And I'm judging that as a flush because I know that's actually held back on that zone. So we've sort of gone through, you can see, reacted up, got a higher low, and we're starting to rally from there. So would have been a nice little entry there. Could have been a nice little entry through 220. It's definitely on the rise now. It's just, I would be looking for the weekly to be saying to me, okay, maybe we've got a bit ahead of ourselves. Momentum's up on the daily. MAs are only just crossed, so we're actually quite a bit away from the daily MAs. I would expect a bit of a pullback. So if I'm looking to get long here, I'm not going to get long there, up here. I'm not going to get long in sort of where we are at 240 at the moment. I'm looking for a pullback, and actually just make that better. That's your rally. That's kind of this leg up here. I'll just be waiting for a bit of a pullback. If I get something like that, ideal, because I know exactly where to manage my risk. But if I can get a bit of a crunch, I just want a bit of a flush of those longs on this little pop, because on the weekly basis, it could still hold below this zone at around 280 and sell off again. We don't know, but just the way that it's come screaming down, that move down was a lot less aggressive than the first move down. So there's buyers starting to soak it up on that pullback. And I just want to see if those buyers are willing to jump in again. Okay. So that's why I'll be viewing this. I really want to, if I don't get long here and it continues to go up, that's just my fault. It's too bad. Okay. I'm happy to leave that one. I just want to see that pullback, a bit of a contraction in price, and then you're looking for that expansion on the daily. And I think this next leg up will be a lot stronger, and it'll take us straight through 280. And potentially from there is you're looking to the next level up around 420 or so. Okay, so that's, we'll whip through these. That was WBT. EUR, is that, you're not looking at euro, are you? You are actually looking at stock. Lithium, okay. The weekly is not showing much if we just jump in there. Actually, the weekly is not too bad, but on the weekly basis, you've got to get through this zone here at high at 6.4 cents, say. We're at 6.4 now, 6.5, high at 6.5. So we're right there now. But I'd like to see it get through there, and I'd want to see a high low. Okay, so we're sort of about here now, and you can see what I'm talking about. That's not what I want. Where are we? That. So you've got, you move down. It's just squeezing out the longs. A bit of a squeeze here, bit of a pop, squeeze down, just a little minor level. But what we're doing is just up at that 6.5 level. So I would take that for the fact that we're just starting to contract, or we're starting to base out sideways after this big leg up. So this big leg up, we've spent a lot of time cleaning out these late longs and resetting. Potentially we're still in that resetting phase. That's why I'm looking at it. We're still in that basing phase. It hasn't proven to me that it wants to kick on. Okay, just because we're up at this 6.5, I would rather see it pop up, retest, and go, and then look to get long. As simple as that. You want to see it pop up, potentially get the first pullback. What happens in the first pullback? It's not just going to be a flush and come back down below 6.5. Especially if it gets to 6.7 and then stops, I'd rather see up at 7 cents and then just seeing if I can get a higher low to work from. Okay. So that is EUR, AIS. We'll get into that. My mouse keeps nicking off to the next computer. See how this one's a bit different. So we're not coming out of basing on the weekly, or we're not coming out, there's sort of no question what's happening. It's been going up and it's got a bit ahead of itself in this rally, but it's pulled back and it's shown some strength off the MAs there. Just look at the weekly, because the first thing I'll be questioning here is, after this move up, do we have to take another leg down, flush out a few more longs of this leg, because we have been settling into a nice uptrend from somewhere around 4 cents. We're at 20 cents now. So if you're buying it at 4, you're 4 times your money, up 400%. Okay, where we are. So ideally, just draw that up. So if I'm always looking from this the basis if I want to get long. That's the leg up that I'm concerned with. This is a pullback. We have spent a lot of time sitting, banging off 18, and I think today is the first sign that we're heading higher again, but we're getting rejected there again. So it's getting the same. This could be a lower high. We might have to have a deeper pullback. That makes sense. It's worth, you could easily take a buy at, you could have bought it today on the push through, or probably would have bought it at more 21, and your risk is going to be below 18, because you could be facing, and then if that's the case and you've sort of bought it through that push, you want to see that kind of thing happen. If it comes straight back down to the lows, there's a good chance it's going to go through and you're going to get that deeper move like we're just saying. You got caught in the flush, it could finish below. You bought the minor breakout. I would feel your stop's got to be there because you could have a deeper correction. And just flushing out a few more. Everything's working in your favor here. I think the MACD, way I'm looking at it, back to the zero line, it's starting to look like it's crossing up again. So there's a chance we're just going to go bang, 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 bang straight up, which is fine. Okay, so that trade there, there's nothing wrong with that trade. The only risk is we're going to go for a deeper correction. But it probably depends on what that weekly's saying. Is that extended? Not really. The weekly's actually looking quite good. So if you look at it this way, I can't really minimize that, but that weekly, we are a little way away from the MAs, but it doesn't mean too much. We could still kick on. Okay, it's just probably the biggest thing you would worry about is being up near these highs. So what you're doing is buying to those highs. So, okay, in saying all that, probably wouldn't have just off that. I tend to think that we went up here this time, had a deep pullback, went straight through, and then we've got this deeper move down. Okay, we completely failed off that level, all the way from 21 down to about 4 or thereabouts. Okay, so we've got some big failure off that level last time we're up here. So a lot of traders' minds, there's going to be in the back of the mind going, oh, we fail off here. So if you're long, you're probably going to be quick to take some profit. So you got to remember there's probably going to be some traders that are a bit nervous up here if you're getting long. Okay, so way I'll be looking at that, the fact that we've just stopped at sort of this inside level, I feel that we could have a deeper correction and go through 18. Who put that up there? Pete, are you long that, Pete, or are you sort of just watching it? Because if that's the case, on the weekly chart, you've kind of got ahead of yourself with this move up. We're really extended on the weekly. That to me, generally when you're extended, you tend to think we need to squeeze out some more. I think if we can squeeze out and get somewhere around 14 cents, then I don't think we're going to do that. I think we're going to hold up quite nicely and we're going to charge up and through 23. Okay, because the weekly, when you start to move it back a bit, is looking actually quite good. Okay, it's just whether or not we're ready to kick on just now. Okay, yeah, that makes sense to me anyway. Hope that makes sense to everyone else. All right, what's next? You got ING. Did I just draw? ING actually, we're on a weekly. That looks pretty good. And I want to draw this weekly up. So I can see that it's probably going to be a good setup, to be honest. Are you in this one, Pete? Just watching. Ingham's, chicken. That's not what I want, sorry. No, it's not at all. I've got this one. So this sort of goes back to, I guess, what we were just talking about. Just had to have some ice cold coffee. This was worth keeping a good eye on it, Pete, I reckon. So you can see on the weekly basis, this is quite a key level, and it's not, this is why I wouldn't be saying 3 exactly is the support. It's a range. The higher time frame you go, as in you go from a minute to 5 minute. The 5 minute is more of a zone than 1 minute, and then you keep going up, say to the 30 minute to an hourly to a daily to a weekly. When you start hitting on weekly, it's not a hard and fast level. Okay, it's going to be a zone, and you can see that's clear that it's powered through that low, previous lows it's trade up on, got through here, reacted straight up and off, come back in, and it's reacted at that level here, before it's gone through again, and it's gone through and it's taken out this low. Okay, but it's reacted straight up and off at that level. So we know up until this big weekly green candle, the market's down. Then you've got, and you can see it's another key level. Then we've reacted up and off. So we've gone through this high. So now momentum's up. You've gone through that high, and we've done the same thing through that high as what we did through the low. We failed, we pushed through, flushed it out, and it comes straight back down again. So if you're buying the breakout there, or even here, if you're long and you sell that breakout there, I'm just trying to say, no, take it from the flip side. If you bought that off that level and you bought it, say in this green candle, and you got your stop below, you've just been stopped out. There was no high or low. There's no real reason to buy it really on that weekly basis because we didn't get pushing, we didn't get a high low to buy off. If you're just looking purely at that weekly chart, you're trading longer time frames because here we've gone down, popped up, straight back down again. Okay, so if you bought into the level like we were just talking about before, you can see that even on your shares, it's similar type of thing. You know, buying into a level, I know the problem. I'm hesitant to say that on shares because I know people just don't use stops. You know, if you're buying and they've just been taught to don't use your stops, it'll come back. It'll come back unless the company goes broke or unless no one else wants it. You know, there's many times that the market won't come back. Okay, especially when you're trading some of those small cap stocks. The market could be going down, down, down. In the next few years, it sits on 10 cents and it's come off $1. I mean, I've got one CCA. You know, I remember that. Bought it high and then it's just come down. It's hanging around 10, 15 cents at the moment. It's been around here for a long time. You know, I'd rather not hold that locking up cash. I didn't put a lot into it, but it's just a crappy stock for me at the moment. I'm just holding it, waiting. I've had some good news releases. Doesn't mean anything. Just market doesn't want to bar it at the moment. Okay, so if you're going to sit there and buy without using stops, I think you can get caught up. Okay, in something that not Ingham's obviously it sort of paid. You bought it on this break here. You've been under a bit of pressure, and then it's working in your favor. Okay, what if you bought it somewhere around here? You bought off that level there, and it got smashed all the way down here, and you're down 50, 60. I mean, you're probably not now, depending on if you're still in it. But then you got this big sell off there. Do you think you'd close it, or do you think you would just put it in the drawer and hold it? I mean, who's to say that that's not going to sit down here for the next 5 years? All right, so I don't particularly think that's the best way to trade. If you're either an investor or you're trading, either buying it because of the fundamentals and the valuation should be a lot higher if you're willing to buy it at a good price, or you're buying it from technicals. And if you're buying it from technicals, you should be running stops. I feel you should be running stops all the time because that buying just in here was not buying with momentum. Momentum's down there. You don't know when it's going to stop, and you got caught. Buying it when, let's get out of all this. Could have cleared that right up. Buying now when you've got markets popped up off this key zone through here, okay, 3 to 290 to 3 in here. Okay, that's the key level. We didn't get back down there again. So at the moment, you've got lower highs holding it. The market ramped straight up and off, then it's come drifting back down. It didn't wait to get back down at 3. Buyers stepped in it earlier. So buyers stepping in earlier is a bit of positive momentum, potential positive momentum. Holds through here. That was, on that weekly chart, good buying opportunity. Buy the break, your stop's below. It breaks up, great. It comes in that high, starts to fail. You might take some off, locks them away. You've got a lower high coming to play. You might have been a break-even trade. Don't know. Okay, but either way, you're giving yourself a lot better chance of making some money on that by trading from the price action, looking for a key level to hold or a key level to break, anything like that. Okay, then it's pumped up, flushed out the high, straight back down, retested that level and gone straight back up again. Okay, this is what I'm interested in right here. If anyone can see, that was the worst drawing. But that level there, if you can see that, I'm guaranteed if we get down to a daily chart, what we've got is it's ramped up again off that level. It's pulled back. It doesn't mean that we're going to, just because it's pulled back, it doesn't mean we're going to get a lower high here because that's extended. I'm feeling that after all that, cracking price action, so this is essentially push down. It's kind of this action on a very broad market. So I'm sort of anticipating after this action here, on a bigger time frame, we're going to get some momentum to the upside. All right. So if we get into a daily, I think it'll be clear on the daily. I'd probably be pretty happy. I'll drill that straight in. I'll probably be pretty happy buying that SYR. I don't think I want to know about that stock anymore. We'll have a look at it. Is that on the 15-minute chart? I kind of like, the fact that we've held up at a higher level. You can see that market's gone up, come back down. That's the anchor to this uptrend. Come back down and retest, and we're starting to lift again. We've got a higher low, so it's quite clear that you go, well, if I buy the break of 355, my stop can be below, around 375. And there's a chance that we're going to break up and through 410. You know, so risk reward, you're getting in early, you're getting in what we call an ICT, and I'm sure Joseph would know the ICT. Many others probably know that too. And remember the weekly structure that we were just talking about. Weekly structure to me is looking really good. Good move up here. So we've got every reason that this time we're not going to fail like we did back here. Okay, come all the way back down. We've ramped straight back up. We've retested and held that level. This kind of action probably on the back of good news. Held a high low in here, ramped up again, drifted lower, didn't quite test that low. It pulled up short at a slightly higher level, and we started to go. So at the moment, it could go each way. So if you're managing your risk, you're basically sitting there going, if it breaks 350, I know where I think it's going to go. We've got a high low in here, just holding, break at that level. We're probably going to target 310. If it doesn't, holds below that level, and we break down through 380, there's a good chance that that's going to be 1, 2, 3. Okay, a secondary bigger leg lower. Great work, Joe. I know you do, mate. All right, so that, I think on the daily basis, it's looking pretty good. It looks like it's starting to edge higher to me. It's looking good. And look at the MACD as well. The MACD is starting to come back into zero. Okay, so back into zero here, meaning it's had a pullback. Momentum on the upside's come out of it, but it's actually holding a higher level. So if momentum starts to pick up again, the Momo starts to kick off to the upside, you've got a lot of room for momentum to really start to push it. And price could, you know, if it starts to really jam up and through 410 in a couple of days, there's going to be a good chance to go straight up and through. All right, let's get on to the next one. QPM. Look at that one. ING, QPM, Joe. On the daily, nothing much to look at. It's looking good. The weekly, look at that. That weekly, and there's a lot of rubbish in here. The weekly is still looking pretty good too. I think that weekly I had a good run up, pull back to the MAs, another run up, this high low. Okay, then in here, that's a prime. This is a prime entry. If you're drilling down, you're looking at this, and you've got this green candle. It finishes this green candle. The next week you'd be looking at that. What week's that? What's it? I want to say the 31st of May. Yeah, I'll be pretty primed. Look at that setup. Anyone wants to know what a really good setup looks like? Just remembering we've got that, was it here? Was that what I'm looking at? It was here, wasn't it? Okay, so I'm looking at this green candle on the 31st. Just in here, that finishes that green candle, and the start of next week, you're looking at that going, well, look, we popped up, had a pullback, back to the MAs, we've gone up, we failed just below these highs, we've come back down, but we're starting to, you know, this candle here, a couple of red days, a couple of red weeks, indecision candle. It's a whatever you call it, a spinning top, but it's within the previous candle, high and low, and then the next one, it starts to rally. Okay, so we take out the previous week's highs, and it finishes up towards this high or the close. To me, that's a cracker because we're bouncing off the MAs again, and you get an opportunity to front run those highs. Now, it could fail at the highs. We don't know that. If we look at the daily, all we have to do is look at that price action in here. No, wrong one. That's the one I want. That price action there. And you're trading, we're looking at that weekly chart. The momentum, to me, is looking ready to spike on the weekly chart. And we go back down to the daily. I think it was somewhere around here. And look what you've got here. Well, that's not what I look at. You've got a break of the high. Risk is high or low. So you've got, this is the move up. This is a week back. And you've got, I think it was this week, it finished somewhere around, it might have been here. Let me just see. 28th, 31st. Okay. It was a cracker. That was an absolute cracker. You could have even bought that just the final day of that week, which is just in here. Okay. Because you've got this high low in here. So you've got price come down, retest, up, popped up, pull back, made a high low, it's gone. So on a daily basis, prime setup. So you could have bought that breakout. Yeah, it's finished just below, so you're down for about a day. The very next day, sorry, the start of the next week, a new weekly candle, it's gone up and through, it's taken out the highs. Okay, you're finished, you're in the green. The next candle, bang, 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 and you've got this run up here, okay? And it went straight through those highs. So that, to me, that's a beautiful ICT, inside continuation. So this is your weekly chart. You know, if we draw this up, I want to clear this up for you. Okay, so this is the move up in the weekly. Okay, if we go down to the daily, this is your daily. Why don't you change colors? Down. I'm hoping, no, I'm drawing it in blue because you can see it. So on the daily, we're just worried about this action. That's down, secondary leg down, but it's still held below above the weekly anchor. Pops up, makes a higher low. Okay, about there, I don't know if I would have taken that break there. And then you've got this kind of action. Okay, and then one powerful leg up on the daily, it just went bang. So that there is an inside continuation. Okay, that's your pullback. We're starting to rally. It's within this high. ICT setup, by the break of the high, risk is below, and you can see how high a probability setup that was. It just kicks on. It's really, really nice. All right, we'll do our last one here. SYR. Is that so I'm just on the 15. Oh, I haven't got a intraday. Maybe I have got 15. Yeah, look, it could easily go. So on the 15-minute chart, if that's the one you're looking at there, Sedge, a breaker that, breaking up, I'll be looking at that candle, this one candle here. If it starts to get up through previous candle, yeah, it could be a buy, and your risk is below. Yeah, so 136.5, 137, stop at 134, expect them to go through 138, and that's killing me because I was looking at it at 114. This idiot here didn't buy it. So anyway, yeah, on the 15-minute, you've got a high low just starting to confirm here, bouncing off the 15-minute MAs like we've done before, all the way up here, bouncing, rinse and repeat. It looks like it's doing the same thing. So buy the break up, front running the break of the highs, and see if we can get this expansion up and through 30, 38, 140. If we go to the daily, the biggest problem is you're just coming up to these highs. What's the high there? 137.5. You've traded 137 today, so that's the biggest problem. You buy on the 15 looks good. You know where your risk is. Problem is on the daily, it's extended, and on the weekly, look, the weekly actually looks really good. From that weekly, I'm sort of expecting it to get through that. So what I'm looking for now, I want to see it react off that high, react off there, hold a higher low, and then I could jump in long because I think the weekly is looking really good. But yeah, got a bit ahead of me. I was looking to buy that through 120, pop out an alert. I just didn't believe it, and bang, up she goes. So left on the sidelines, and it was probably purely because I'll show you what had me second guessing myself. Wrong one again. No, it's not. Let's just stick with that. I was looking at this kind of action. Oh, look, I should have bought that. Really should have bought one, and the stop was below here. Quite, it was clear as mud now, but yeah, I think just prior to that, I thought we were going to back off from here, even with that little pop up there, back off and consolidate a bit more, but it just turned around, went bang straight back up. So yep, less standing on that one, but either way, we're up at these highs now. 135 highs. We're sort of just extending those highs. I think we're getting a bit stretched. Momentum is not, the MACD, if you're looking at that for momentum, whatever you look at, I don't see it's pretty too stretched just yet. It could get more, could go a lot harder. It's just that if I was going to buy here, my stop's still going to be at the same spot as what I would have had buying at 120 because there's no higher low to work off. It's just 4 red candles straight up. And I think if you buy off the 15, yeah, it could work out, could go through. But I feel like it just needs to flush out some traders first before you reset and you really kick on that weekly momentum up. Right, that's about it, guys. Probably call it a day there. So it's a bit longer than normal. Sorry about that. Hope you enjoyed. Now, if you've got any questions, we covered quite a bit there. I know what we're talking about at the start. A lot of people, it doesn't sort of float your boat for a lot of people. But if you're intraday trading, it's really worthwhile you've got to spend some time. I say this to people. End of the session, take a snapshot of your trades and just mark up. You take a snapshot, so you mark up your trades, and then maybe take a snapshot, mark up the prime entries. Which I know it's in hindsight, but what it does is train your eye. It gets your eye into what you want to see. And there's a few key factors. Is it stretched into a level? Yeah, it is stretched. Okay, then we've got a lower high coming off, or it's stretched into a support zone, and then I've got starting to provide a short term, off a lower time frame chart, so the 1 or the 5, depending on what you're trading. Okay, it's stretched into a support zone, extended in there, it's fell away, but it's starting to find some buying support. I've got a high low. Can I work off that? Yes, I can. Okay, because it did play out, and then you can start to take your stats and you start to see things that play out time and time again, and you can work your trading around it, knowing that if you trade, it might be a 50-50 scenario, but when it does play out, it could be a 2-to-1 easy, and then you can trade that. It gives you a reason to trade it. But take a snapshot of your trades, mark them up. I always do. I'll mark up today, and I'll probably put a few cursing words on there just through dumbness. A few dumb entries at the start that got me chasing my tail, but actually it worked out quite well. In the end, I traded it pretty well. If I could have held that short a bit longer, but unfortunately, I can't talk and hold at the same time. I'm not that gifted. I will be staring mumbo jumbo. I'll be looking at the market while I'm still short and just talking rubbish to a lot of you. So, but what I'll do is go and mark those up, mark up my trades, mark up the prime entries. So it just keeps me focusing on the same thing. And I mark it up. Is it at a key level? Yes. So what I'll do is just mark up the key levels, leave my key levels on there. How did it play out? Did they trade off those key levels? Yeah, more often than not, I'm right. Those key levels, I feel like I'm pretty good at marking up the key areas that I want to trade from. And I'm marking up, I know what I'm expecting at those levels, whether I'm going to expect, like I said, push through resistance, a retest and hold, and then go. And I'm looking for longs, or flush through it, straight back down. So it's taking out stops and it starts to build a lower high. Those stops, those buyers have been trapped. We know it's going to squeeze down. And what you'll get is not just those buyers that got trapped. Anyone that's long earlier is going to get squeezed out. Anyone that wants to get into the market is probably going to go short. Okay, so you've got a few things that work in your favor. So I know that around those key levels, what I want to see. And it's a matter of I keep marking up, make some honest notes that I'm trading like an idiot. Okay, don't do that again. And what that's done, it actually has helped me, to be honest. It's helped me quite a bit to make sure that I don't do those trades again. I know that 9 times out of 10, if I trade just on that open without any real confirmation, I'm getting chopped to pieces. And then if I do 1 or 2 bad trades, I tend to do some, revenge trading. So I've proven to myself by trading that time and time again, it just doesn't work for me. Yeah, I'll get the occasional win, but more often than not, I'm not going to win. It's just going to be, it's a losing scenario for me. So I'd much rather trade off levels, key areas, and key zones, and price action. If we're going offer to bid on the 5-minute, it looks like that's what we're doing. Then I want to look for shorts on the 1. Simple as that. I'm going with momentum, and I know where I manage my risk. But it's really good to draw all that up, save it. I think was it Joe that's got me into Evernote, and I've been using that quite a bit, putting it all in there, and then just reflecting on it. It's really good to, having a bad time, a couple of bad days, go and reflect on when you were trading good. Go and pick out the ones that you had a good day and why. Okay, I was trading good then because I was sticking to my rules, and I'm going from bid to offer. I'm going from offer to bid. I'm going from level to level. I'm going with that. I'm getting the 5-minute momentum up. I'm trading long off that because of the 5-minute momentum's up, and I'm trading long off the 1 because it's a good setup. Simple as that. Okay, so it's really worth doing, and it's not just, like I said, we showed you a couple of examples on the shares that that market will flush. It's not just confined to a. I mean, look right here. That little run through off that higher low, flush through the high, come straight back down again. So you've got some really short-term traders, and CFDs might just got stopped out there. So it's really interesting to see what happens on different markets. And there's a few key things I reckon. If you're trading from level to level, whatever it may be, it's probably less important on shares, but it's still, you come into a resistance zone like we are on this one here. Do I really want to be buying that? I don't want to be buying up here at 135, 134, because the risk to me is right down at 105. And if this ends up a double top, that's going to smash me and take me out. That's not worth the risk. What do I want to see? I want to see it either fade off that level so I can sit and wait, or I want to see it go through and hold a minor high low, even if it's a minor high low, because then you get people like me that are chasing it higher. But I know that that's a good probability setup where if it goes through this high, comes back and retests it on a really short, even if it's on a 1 minute time frame, there's probably got more in it, and there's going to be more buyers chasing it up, and it's worth little risk to see what I can get out of it. Okay, enough ranting, but thank you very much, guys. Remember, if you like what you hear, leave us a like, help us spread the word. Any questions you may have, you either jump on the forum, the Discord. If you haven't got that, send me an email to support@tradesetup.com.au, and I'll send you the link. If there's anything you want to talk about offline, a bit more privately, I'm happy to chat, especially about trading. I don't do much during the days. Now that the kids will be going back to school, I'll probably have a bit more time on my hands. Anyway, guys, thanks very much. We'll speak to you again soon.